Good evening, guys. Tony D here again. Back for another day. Now, we were talking last night that there's potential here for a Brainerd-led recovery, and what's going to be important is what happens after that. Now, we got the bounce. That's fine. Then we got a fair bit of selling coming through in Asia. Now, I'm going to look up. I'm going to show you a couple of things here, just to let you know. That sometimes you can get clues about the market via the price action in pairs which seemingly aren't too important. Now, the pair I'm going to look at today is the ASX. Now, the ASX is a Australian stock market, all right, but it's still relatively large cap index in terms of if it moves. Well, it's not going to move the Dow too much or the DAX too much. It can show you sort of the price action, what you can expect during a day. And what we saw today is that we got a nice little reversal a few hours into the actual market open, and then pretty solid selling for the rest of the day down to fresh lows, lower than Monday's low, pre Barnard rally. Now, she was very dovish. She was dovish, and she laid out a case for holding rates where they are and going slow and worrying about China, worrying about the rest of the world. Now, this doesn't mean that the DAX is going to follow it, but it's definitely a warning sign to me that this rally that we saw yesterday was a bit of a dead cat bounce, and that the market's ready to sell into this sort of recovery, and that in that scenario that the US dollar is going to do quite well. So the easiest way to play this yield game, this yield trade, and this is what we talked about yesterday, is to be short the Aussie. Let me go back to the proper charts here. It's a bit ridiculous. Okay, so short the Aussie is the main way of playing this. And Aussie has been under pressure today in Asia. And we had a little test towards 75. Didn't break it just yet, but perhaps we are going to. And I'm going to be keeping an eye on this particular pair as another weather gauge of how the markets are going. And sort of the canary in the coal mine type feel that if, say, the Aussie breaks 75, add that to the fact that the ASX was definitely a dead cat bounce, that potentially in the US session today, all that this rally did was provide a better opportunity to get short and to start to play out this theme that global bonds yields have bottomed, and bonds are in general are going to be falling. Okay, now that should lead to risk off behavior, and sort of continuation of some of those moves that we've seen. Now, the other big piece of data we got out just half an hour ago was the CPI from the UK. Surprisingly dovish, surprisingly weak. Now, this is going to lead me to reevaluate my aggressiveness on the pound trades, because I'm quite long pound in against the euro, and I'm quite long pound against the US, and I dabbled a little bit in pound yen. Now, all those trades don't make sense if we don't start seeing real economic data start to come in stronger from the UK. And I mean, we've got sentiment data suggesting it's going to be quite strong, and the whole recovery trade is that the sentiment data was going to lead into strong real data in the coming months. And the first piece of data that we got, that manufacturing data, didn't really it's surprisingly weak, and that's real manufacturing. And then the CPI, which should be stronger given that the currency's fallen so much, was not a lot weaker, but a little bit weaker than forecast. And I was hoping for a little bit of a surprise, 0.8, 0.9, and then something the market could run with. All this did was release some of the grip that the rebound buys on the pound had yesterday, and that this was looking very constructive here. Maybe not on the 15-minute, but if you're looking on, say, the 4-hour, that bounce was looking pretty good back above that previous high, and generally giving us confidence to enter in on dips. But this data here puts me to the sideline again. I'm not going to be aggressive on the pound, and I don't, the dead cat bounce signals we're getting from the Aussie key or the Aussie US and the ASX suggests that perhaps that selling's kind of come back through later today in the US session or in the DAX session. I mean, Aussie investors aren't sophisticated as the rest of the market, but they're not retarded either. There could definitely be a signal here that Western markets are going lower, and this should lead to more US dollar buying and just sort of put this trade under more pressure. We might be going down to say 130, 150, and we might have to go with the risk off theme for a little while before we get to that UK recovery trade. I mean, the UK recovery trade will happen. It's just a matter of timing of what. So you can put it to the side, then come back to that trade later once we get the data to support it. You can't make a trade idea and then say it's contingent upon this thing's happening, and then when it doesn't happen, still hold to the idea in hopes that it's still going to react the same. So it's pound's becoming a bit more neutral to me. I'm still relatively interested in watching it, but I'm not going to be playing it too aggressively. Alright, so I'm going to keep on watching the Aussie today. Keep on watching the Aussie. Keep on watching this DAX. Keep on watching this US stock futures, and let's see if the selling pressure comes back through. Say we see a couple of sells signals here on the DAX, so it starts to fall in the next hour. I don't think it's going to stop. I think it's going to be one of those days where it's like confirms that there's risk off in the market, and a couple of key levels are broken on the Aussie and on the US, on the Aussie and the Kiwi, and that's going to start putting a lot of pressure on the pound and the euro. At some point, the pound and euro will falter to the US dollar strength, just not straight away. They're a little bit delayed. Surprisingly weak is the dollar yen, given that US dollar strength coming from the safe haven. But on the other hand, the yen is a stronger safe haven. All right, now this pair is difficult, tricky right now. I definitely don't want to be selling it down here, but I'm not convinced that we can rally quickly either. The whole idea about getting long the dollar yen is that you expect the BOJ next week to go ballistic. We may not get that. All right, we may not get what you want there. Sort of the trade idea, though, is that you buy ahead of the BOJ and the market surges in anticipation by the rumor, and then sells afterwards as the facts come through as not as aggressive as everyone was hoping for, and the BOJ disappoints a lot like that. So that trade idea has been floated around a fair bit in the market. I'm going to stay at that one too. All right, if the stock market sell off today, I don't think that dollar yen's going anywhere quick. All right, so that's a pretty dangerous trade. All right, so we've got some mixed signals coming through on the market, making trading a little bit harder. And some of my favorite pairs are underperforming. So the pound is definitely not working out like I hoped. And so we have to keep on looking, right? You keep on looking for a trade. Now, the whole selling the Aussie and selling the Kiwi makes sense. And if you're right about the risk off coming, then if you sell here, then in a couple of weeks' time, above 75 will look really high. And you'll be like, I wish I would have sold up, yes, a few weeks ago when the market was giving those negative signals. I just was waiting for too many confirmations. I mean, you can't wait forever. There's always risk on every trade. The potential for reversals, especially in this current market, is extreme. But what's going to cause the rally today? On say something like the Aussie, you're going to need somehow US dollar weakness to manifest itself. And that would have to come from the stock market, and it won't be coming from Fed speakers because Fed's now in lockout period. So if the Fed's in the lockout period for 2 weeks, then we're relying on the stock market to rally a second day on the words of Brainard against the sort of sentiment and feel. That's a big ask. And that the stops are juicy below 75. Sometimes you just have to ask yourself the question, right? Where are the stops? Who's under pressure? Right now the longs are praying. The longs are praying, so that gives you the trade, right, to sell the Aussie. I mean, let's just sell a little bit Aussie just to see how that works out. I mean, it's not a perfect trade by any means, but it's a trade, and we are here to try and make money, right? Let's have a think about where the market shouldn't get to if this is the way. I mean, you can go crazy, and put your stop above 70. You know, the high from last night. That's a really big stop. Now, if you're going to put a stop up there, you got to know earlier than that if the market's rallying. But you better take 150 points. You better be holding this bad boy for a big move lower. If you put it in a little bit tighter, I don't know, 25 pips, then you can sort of be a little less aggressive on the downside. All right, but risk reward is a critical part. When you're placing your stops, just don't put them willy-nilly. You know, have a certain amount of money that you're ready to sort of take the loss, and then if the market moves against you, it's not so much the trade idea has gone wrong. You're just stepping out of the market, reevaluating what's going on before you sell again, say, or before you decide to wait to sell again higher. You know what I mean? Like, you can, not being in the market is actually a trade. It's a conscious decision not to get involved right here. And it's a very important part. Patience. You know, you got to develop it. You have to develop it. This is just trading now because we want to get a trade on while we're in the market. All right, so this is an okay trade idea. I'm actually going to put it up here just because I'm going to play a little bit safe, and I'm going to try and hold this trade for, you know, down to 73. The Brexit low. Let's have a look at the Brexit low. Okay, that's a natural target. And that's something that can easily be achieved if the sell-off in the stock markets continue. And if they do continue, the trick here is, the key thing is that they'll get more severe, because there's not going to be for 2 weeks anything to help out. And in 2 weeks we do get the Fed, and the Fed's going to be ultra dovish, especially if the market is selling off. And we've seen that before in the last 6 years, many times. You saw the market's threatening the Fed. Come on, we dare you to raise. Dow's down 1,000 points in the last 2 weeks. What are you going to do? And the Fed's usual answer, especially Yellen, is try and stabilize the market. It's like their main mandate is to stabilize the stock market. So keep that in the back of your mind. If we come closer to the Fed and the stocks are getting punched and things are unraveling, the Fed's very considerate of stock market moves, especially leading into an announcement. Seems to be, they're very sensitive. Evening, Potter. Evening, Jenny. We're not going to look at Aussie Kiwi. Aussie Kiwi. Yeah, I shorted a little bit. Hedged out some trades a little while ago. We'll see. We'll see Aussie Kiwi. Aussie Kiwi is one of the most popular retail trades out there. So obviously we have to watch it. Now, definitely all the buyers are buying at the wrong time, but maybe we'll be proved right later. It's a very, I'm buying more on the value of it more than the price action. Price action is extremely bearish. But the fundamentals, there's long-term fundamentals that suggest that there's a relationship between the 2-year yield difference between RBA and RBNZ. They suggest that the Aussie Kiwi should be trading at above 110, and that sort of charting of that correlation is very strong for the last couple of decades. So if you believe that the market will always go back to what it knows, then I think that over time we're going to see that. We might just have to get a little bit closer to the RBNZ cutting, because right now we're a little far away for the market to care, and it seems to be on a mission to go to parity. So it's on its mission, and it's not taking kindly to our pleas, our hopes, and reverses. So yeah, I mean, Aussie Kiwi, Everyone knows the deal on that trade. We can't talk about it every day. Every day is another 30 points lower. How far can it go? That's the low back in 2015. Had a little couple of whacks at the parity level, then rallied 1,200 points. This time I think we're going to give it another test. RBNZ better get ready to intervene though, because if it breaks, who knows where support's going to come in. Maybe 98. 98 I think is the bottom. I'm talking to guys who want to just sort of trade and invest in this pair. They sort of are longer term in hedges or business accounts. Now I suggest to them, if you buy here, you need a 400, 500 point stop. And that should cover you in 90% of scenarios. I mean, there is a scenario where China goes bust and Aussie Kiwi goes to 95, right? That's possible. Market will tell you what's possible. You don't tell the market, but that, in terms of the historical charts, this sort of wave pattern between 110 and 130, it goes back for decades. And now this chart here alone is showing it since 1993. Okay, and it's never been below parity ever. So that's why everyone's so excited about it. I understand that. I do want to get into it as well. I did at the 105 level, but you can't argue with the price action. Ooh. Price action is just incredibly weak at the moment, and the fundamental reason to rally just doesn't seem to be working. So, what can you do? What can you do? You gotta wait. You gotta wait for things to line up. Alright, so that trade is not working out. Now the other trade, Euro Pound, was looking fine until the CPI numbers. I've been selling Euro Pound for a little while. I talk about it a lot. I do fancy it going back down to 82, 80 in the recovery trade. But if the UK data starts to weaken again, we're going to have issues with this particular trade. And so you got to be careful. You got to be careful. You got to have some stops on it. I'm going to actually put some stops on here. Oh, I'll consider it actually. I'll consider where to put the stops. I'm thinking either 84.90 or 85.20. But you know, you don't want to fight a pound sell-off. And there are people who believe this is going to go up to 90. Not me, of course, but yeah. There's always two sides to a trade. Someone's selling Aussie Kiwi at 102.65, right? Now those are the guys thinking it's going to parity. Deutsche Bank and a few others. So think about that when you're trading, guys. So the Aussie Kiwi trade's obviously hurting my profit and loss, but we'll see how that plays out over time. Sort of can handle a fair bit. I can handle down to 98 anyway. Won't be too bad. Now, what did we say we're watching? Watching the Aussie and we're watching the DAX. Now, it could be a bit of a slow burn today, but it's still definitely the two key things to be watching. We are getting a little bit extra weakness coming through on the oil market. Now, that does not help sentiment. And if later we get a break below 45, that could be another little knock on the door for the bears to come out. Alright, and add to that US dollar strength and also add to the commodity currency weakness. RBN says not till after the Fed, Nick. I'm not in 30% drawdown. I just haven't added more money yet. I mean, the war has just begun in the Aussie Kiwi. I'm going to be buying more towards parity. I'd probably risk 50 to 60k on that trade. Depends how the pound trades are going, of course. But yeah, no, that's a sort of once in a decade sort of opportunity I don't want to miss out on. Now the key is, and I want you guys to hold me accountable, I don't want to take profit on that trade this year. I want to be holding these trades all the way until we get back to 110. And if I don't, then I want you guys to ask me, why did I risk 20k if I don't make the 100k? Yeah, now, so we'll see how it develops in the coming weeks. A lot of traders are on it, and it's probably one of the most posted trades in there, in the market. I do want to have a look at some of the new trade ideas over here in the trading room. If you're watching on YouTube, come across to Trading Signals. We'll go through some of the risk rewards. Why is he buying? It's a daily support. Should travel to resistance. Okay. Don't know if I want to agree with that. Look, there's nothing wrong with buying at 75. It is a support. But to just buy every time, this is like the third test of 75, right? It's very dangerous. Mainly because I'm selling. Maybe that's a good sign. Maybe that's a good sign for you. In our regards to the Euro USD, good luck getting that much movement out of the market. Yeah, we got nothing that's on the agenda to get this sort of movement that you're looking at here. That would be surprising to get that sort of US dollar weakness without a significant piece of news at the moment, and even stabilization in the market, which is what would cause medium-term US dollar weakness going into the Fed. Would take 2 or 3 days to wash out, given that stock market volatility. So definitely the whole Fed's never going to raise again short US dollar trade, that's on the side right now. That's not what you want to be getting involved in too much. Kiwi trade, I like this. I like the short. Now Kiwi hasn't had any serious selling coming through for a few months actually. Now Kiwi's notoriously aggressive when it sells off. I do like this short. It is anticipating a sell-off. All right, so if you're doing this sort of trade, then make sure you keep on holding it, because you have to be you have to get paid off on a sort of trade with this particular pair. If you're selling the Kiwi, you hold for 2 to 3 days to get 200 to 300 points, and then you get out. All right, the market moves very, very quickly with the Kiwi, and it's relentless. And the main reason you're selling is because you don't get very good opportunities to sell the Kiwi. You don't get very big rebounds, right? It doesn't play nice technically, that pair. And Aussie Kiwi short, yeah, I like that trade. Aussie US short, so. I don't know pre-float, RS. I was not alive pre-float. Maybe. Have to check that. But definitely I was not trading pre-float. I mean, I was born in 1983. So Aussie and Kiwi floats. I think Aussie was 87. A little toddler walking around, getting some Aussie money. I'll tell you. Look, Aussie was done in 1999. Oh, no, so 1993. But it's just sorry, 1983. And the Kiwi, I mean, it has to be below that. It has to be before that, right? Unless you guys did. Unless you did, Yeah, so 1984 for the Kiwi. So literally when I was born. So I might call this my birthday trade, right? But this is a very long-term counter trend trade that hasn't bottomed yet, guys. This is by no means a day trade. By no means am I endorsing this for the next week or the next 2 weeks. I do see a very strong chance of us testing now the parity level, and the saving grace for this trade requires a couple things to happen, which haven't happened yet. So let's see when it does begin. All right. So for the rest of the day, before we go have a look at some of the economic data from some of the banking reports and how they're taking the Bernard speech. Just remember to keep an eye on oil, keep an eye on the DAX, and keep an eye on the Aussie in the next couple of hours. They are going to be all interrelated together. I'm liking the downside in everything. And but let's see what others have to say on such trade ideas. So we're going to read a little bit of Japanese research today. A bit of Nomura. We don't usually open Nomura's on this stream. Remember, this is coming from FXWW, guys. If you do want to get access to good FX banking reports, they're one of the best sources I've found. Basically, you've got lots of different traders in there, all posting. I post in there sometimes. Just market talk straight, 100% market talk. 99% market talk. Models buying euro pound. Sean Lee asks if it's Naomi Campbell. No, not Kate Moss either. So it's 95% market talk. They're obviously talking about model funds there, buying the euro pound. All right, guys, let's get this out of the way so you don't see my ugly mug. Okay, upcoming meeting on 2021. Next week's gonna be a cracker. The BOEs this week's probably going to be a non-event relative to next week. If the CPI was hot, then the BOE event became a bit more important. I think that the weakness of that inflation data gives them an excuse to be dovish. If anything, they can talk down the pound again. So steepening bond yield curves. One day I'm going to talk to you about what that means. Just know that it's negative. So just like the Aussie and the Kiwi are very, much in demand lately, all the emerging market currencies have been in demand too. In fact, their rallies have been bigger than the Kiwis, and the potential for big adjustments coming in those markets is another source of US dollar strength. Everything's floated against the US dollar, remember? Everything's traded against the US dollar in those markets. So if this is the beginning of a risk-off term, in the period here coming, then look at here. Oh, okay, we're going to talk about that rogue. Sorry, mate. I'll talk about that in a sec. There's a reason you don't do that particular idea that you're talking about there. Sorry, yeah. So where we are here is just a little uptick in risk aversion. It's got a lot of room to go. Definitely a lot of room to go. We're coming off some of the quietest periods in US stocks in 10, 15 years in terms of the daily volatility. That is really, really quiet for the US stock market. So the market's been building up, building up, building up, and we broke out to the downside, came back up, tested it. I'm suspecting we're going down. Bigger pullback. Let's see. Let's see. Someone's going to make a lot of money. Someone's going to lose a lot of money. Yeah, so FXWW, run by Sean Lee. Sean Lee used to be at Forex Live. He's a nice guy. Done some business with him in the past. He's a very good analyst. Very good analyst and a nice guy. He used to be a trader at Deutsche Bank. Now he's retired. Just does a bit of hobby trading himself. Now, all of a sudden, the US elections are coming a little bit more closer as well, which is going to be fun. You know, I imagine if it's a 50-50 race, you know, then all of a sudden it's going to be more interesting in terms of what ridiculous things Trump's going to say. I mean, I'm not going to get too political on the stream about what I suspect, but both the candidates are fairly terrible, in my opinion. They're not JFK, that's for sure, right? Alright, so, yeah, that's on the back in the last couple of weeks anyway. I mean, people concerned about Hillary Clinton's health. Now, in the room, someone just asked me, you're a sec, why don't we do, you know, something like, I think he's saying Euro Aussie. Yeah, so the reason why you don't want to get involved in some of these carry trades at the moment is that the carry trades are crushed, right? Crushed in this sort of market volatility. Because people build up these carry trades for weeks and months. You know, keep on grinding. And the levels that we're looking at on the... so we look at the Euro Aussie. Euro Aussie, I'd like to sell closer to 155. Depending on how this market unfolds, it moves very, very quickly when there's risk off. Now, when it goes down, though, it grinds lower, shoots up. This is a different period. Don't worry about that. What happened here? That was when China was devaluing. That was really odd to the negative. It's not a very good one to look at, actually. Let's have a look at, say, the Euro Kiwi. Euro Kiwi on the daily. See how this market is sort of just relentlessly pushing lower? It's almost like gravity is involved in it. That's what the carry trade is. Now, if I like Aussie Kiwi long, and I like Euro Aussie long, I love Euro Kiwi long. Okay, but I'm just not 100% convinced that the big sell-off's happening just yet. It's what I think is going to happen, but it's not by no means is it by certain that this stock market's going to sell off. And calling a stock market sell-off in the last 6 years has been terribly hard. Every reason in the world for the market to fall post-Brexit, and it didn't. So suggesting that the game is over now is very controversial. Yeah, but this particular pair, in terms of the carry, we're pretty close towards a scenario here where you might get caught. All of a sudden, there's a bit of a spook in the market, and it's sort of reason not to get involved in this carry trade anymore. Not until we're, unwound a fair bit of this. Alright, so I hope that answers your question, Rogue. Don't even trade the Euro SEC one. The Euro SEC's going to be dangerous. Yeah, lawyer talk about Euro SEC. And it's all good when it's all good, right? I think Citibank's trade of the week has been Euro SEC 3 times this year. I just, yeah, I don't like it at the moment. If we're talking in the market settles down there, post Fed, we can look at it again. I've never traded the SEC much though. All right, let's finish up with one more report. We're going to look at the macro report. We're supposed to look at that yesterday. We didn't get a chance. Still, it's a very good report, and we're going to read the early morning read by Jim Reed from Deutsche Bank, the most widely read macroeconomic newsletter, daily newsletter in the market. So it's important to get a feel for what he's putting out there so the market knows what to watch. So you know what the market's watching, right? Literally, it's that simple in the game sometimes. This report has been blamed in some media outlets for wiping trillions of financial outlets. What is it? An ever-changing world. I want to get this. I want to get this. Oh, they're talking up their own research, aren't they? So they must have put out a big report, and then the market fell, and then maybe a couple of people said that this was the reason, right? Doubt it. I doubt it. He's just taking the piss here. He's taking the piss. So there were some people saying that, Brownard as the last speech was going to try and buy some optionality, and she wasn't going to be dovish. Now she was dovish in March, she was dovish in June. She ended up being dovish again, and those people suggesting that because she was the last one to speak and she's a dove that she was going to turn hawkish to give the Fed some credibility. They were definitely proven wrong. Got his wife to watch the Q&A yesterday. God. So she is able to stabilize these treasuries, get the market to reverse a fair bit of those losses. I'm not sure if she can stabilize the market for long though. Sort of get the feeling that perhaps the market liked that little sell-off yesterday. I definitely liked it. I like the market moving. It's gives us something to trade, right? Like right now, we're scared to trade around big supports. We're scared to trade around big supports, and it's the main reason is there's no follow through. So the Aussie trade. The Aussie trade and the Aussie trade and some of those other trades, when they're coming into supports, you can feel the skittishness sometimes of this market, right? We didn't used to have that. We used to bust supports all the time. Now the market's giving too much respect to these previous levels, and that's just because they've been holding for so much. It's holding so much in the last, say, 3 or 4 months. And it reinforces a bit of skittish behavior. So sometimes the support you're getting is just from the shorts closing out, not wanting to see what happens next. And until that mentality changes, perhaps the trendiness of the market's going to be very low. Trendiness is a word in trading. I did not make that up. Like, it's not like the euro is going to go another 12 months without picking a trend one way or the other. I'm 80% sure. Alright, so careful when you're reading the reports about the movement in, say, the German bond yields. Now, these reports are real, but it's only in terms of percentage moves, not absolute moves. So 291% move in the German bond on Friday, 115% on Monday, 46 yesterday. That's because they're coming off such low levels. So if you are moving very, from minus 0.10 to minus 0.7, that could be this huge move, but it's not really that bigger. It's not really that big a move. Alright, that's the end of that one. Alright, guys, that's enough for the update today. I will be back tomorrow. Hopefully we do get some selling coming through so we can talk about how to play it. DAX is definitely looking a little weak. If it does break down, then we are going to see the Aussie selling come through. Aussie selling at these levels, probably going to break 75 this time. And then we can start to talk about how to play it going forward. And as uncertainty increases and the inability for the Fed to stabilise for the next 2 weeks, perhaps we get some nice movement. BOE on Thursday, BOJ next Tuesday, and then RBNZ after the Fed on Friday. Fed's next Wednesday night. So there is a huge schedule coming. Lots of opportunities. So it's definitely, if you're into the markets, then this is one of the best times to trade I've seen in the last couple of years. The potential for huge moves coming is very real. And I may say that a bit, but this time it's really true. Alright guys, good luck tonight. Good luck with your trades. If you want me to look at a particular pair, send me a PM and I will look at it for you. Otherwise, we'll be back tomorrow at 9 GMT.